Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
Hey, how's everybody doing?
What's up, man?
What's going on? Good show ahead today. So today is Tuesday, May 5th. Happy Cinco de Mayo, first off. Probably one of the better times we can bring our buddy Bill Daly in. This is the new normal, I guess, to hang out and do the Cinco de Mayo thing. So we've been time stamping, obviously, every one of our shows. If you're just tuning in for the first time, welcome. If you are a regular, thank you for that as well. The reason we're time stamping every show is things are changing drastically here in the current environment, and stuff we might have talked about yesterday might be different tomorrow. So it's important that all of these are timestamps, so the most up-to-date relevant stuff is going on. So on today's show, we've got Bill Daly from Liberty Title and Escrow. We're going to bring him up here and on in a second. We got some interesting updates related to the Paycheck Protection Program. It's very, very interesting. Now it seems like everyone who got their approvals and got their funding, now the next concern is, well, how the heck can I distribute all this money the right way in order for it to be forgivable? So we'll talk about that for a second. And I also want to dive in towards the end related to a few things that we sent out in an email broadcast. If you're not on our email list, you wouldn't have seen this, but we'll talk about that as well, related to how to turn this lockdown into some opportunities. So all in all, everybody is still very optimistic and but cautious at the same time. And for anybody who's out there that's investing in real estate or in real estate right now, if it's crazy. If you're out and about, there's just so much real estate happening right now. So yeah, anything to add to that, Ian, before I bring Bill in here?
Nah, man, life's crazy. Life's good. Doing our thing. Keeping it moving, jamming. I feel out of control today because I got so much stuff on my desk right now with things that are just getting done, trying to get them done while we got this downtime. And by the way, why do you feel so much?
Because your mic is like this. Your thing like this.
I like it. All right, well, there we go. Anyway, I think we should bring in Bill Daly. I was just finishing up all the shares. We're here. I'm excited to talk to Bill because I think it's time, and I know we brought it up over and over and over again, that real estate maybe is finally catching up to the year 2020. It sucks that it took this for it to catch up, but it's catching up. And I think there's only one way to find out is talk to Bill.
That's going to be a good trend. So what's up, Bill? How are you?
What's up, guys? How are you?
Well, what's up, man?
Good. We already got a comment that says Bill freaking Daly, so that's a good sign.
Somebody loves it.
That's that. So when it says Facebook user, that just means they're on one of the Facebook groups and not through a Facebook page. But sure. Bill, give everybody a quick background about you and what you're currently up to these days.
Yeah, of course. First off, thanks guys for having me on the show. Always good to see you both again. And happy to share our contribution to the real estate world and you both as well, to all your viewers. So I am Bill Daly. I'm the sales manager for Liberty Title here in the state of Maryland. I don't know, been doing this 16, 17 years, something like that. So seeing the ups, the downs, the sideways, and enjoyed the ride every day along the way.
Nice.
In for another ride here with the changes from the coronavirus.
And that's going to be my first question. I'm just going to jump right into it. What do you see as being different between this pandemic shutdown craziness versus what you saw in 2008 with your business and how you've had to adapt, or what changes are you seeing? What's the difference you see between 2008 and currently, since you did ride that other wave?
Yeah, man, I think 2008 was just a complete downturn in the market. I think what you're seeing here is you still had plenty of buyers. You had plenty of people interested in buying. We just got, a massive slowdown because, with the virus and social distancing and, just not being able to do the things that we were doing before. So it wasn't a market-driven slowdown. Truth be told, we're still doing a ton of closings. The large majority being refinances, so that's still something that's really keeping us busy and you have low interest rates, but there isn't a lot of human interaction that you need with doing a refinance. It's all done over phone calls or e-signing and stuff like that. So
Right.
I would say probably anywhere from 60-70% of our business is refis right now.
So a two-part question. It's good that transactions are still going, and we all see this as well, that people still want to buy, people want to sell, people want to rent, people still want to be very involved in the real estate community, and transactions are obviously happening and have continued to happen. What are some things that you guys are doing right now to do a settlement? If people are scared, or you got to follow state and federal guidelines in order to do it properly, what are ways that settlements are occurring?
That's a great question. And some of that, to be honest, we're kind of leaving it up to the consumer, whether it's a borrower refinancing or buyer, seller, kind of what they're comfortable with. I mean, certainly if they're going to do closings in our office, and we do have that at our various offices, we're wearing the face masks and the gloves and wiping down and sanitizing the table and all that. But in certain instances, you have people who have kids and they don't want to bring their kids into my office, and I don't blame them. They're comfortable staying at home and don't want to be near any human being. So I understand that as well. So really in the beginning, I'm introducing the options. So one of them is to come to one of our offices and schedule a time, sit in the conference room, and clearly we're on the other end of the table conducting the closing. And we tend to do a lot of that with our purchase transactions where you really, especially if they're first-time homebuyers, you need to spend the time to explain the documents to them and make sure at the end of it that they're clear with what they're doing and getting into. And that's hard to do sometimes, either on a Zoom call or through the window of a car. But if they feel more comfortable doing it that way, then we have those options. So this week alone, I've done a closing in the conference room table, as I mentioned. Another one where a customer pulled into the front of our parking lot. I handed it to him through the window, watched him sign, and kind of explained it to him from a distance. I think the key is, verifying their identification and then certainly making sure you're watching them sign it. So, a bad play would be if you're just FedExing a package to somebody and saying, "Here, sign this and get it back to me."
Yeah, and then that kind of led me to part two, related to ways to prevent fraud and scrupulous bad things happening. I mean, real estate in general is known to have a lot of fraud, a lot of mistakes. Sure. Right now it's challenging, and one of the things that I'm going to jump in with afterwards is what are people doing right now inside their businesses to make sure things and checks and balances, as and it's not necessarily like someone's trying to be a bad guy and create fraud, although there's an argument of, hey, if you can't even get these files on record very, very quickly, what happens if someone goes and tries to refi a house multiple times? It doesn't really know that there's multiple transactions, and that's happened in the meltdown in 2008. And it's not just fraud; it's also just missing things, missing signatures, whatever the case is. What are some like best practices to make sure that, because it doesn't just affect the title company and the title insurance. Again, title insurance, it's insurance just like any other insurance. That doesn't necessarily mean that they were at fault or it's going to get paid out. Everybody thinks, oh, I got an insurance policy on this, it's fine. It doesn't always work like that.
No, you're exactly right. It doesn't. And we go to these seminars every year, Chicago title seminars and such. And it's very disturbing to see the propensity for fraud and how it's increased dramatically over the last, probably 5 years. So you really do. You have to have those things put in place to make sure that you're, as you said, following your best practices. And, paramount to that's looking at somebody's driver's license and, making sure that the person signing is the person whose name is on those documents. So whether you do that at our conference room, we do it through the window of your car. I do it from, I did another one where we pulled up at the house, left it on the doorstep. They came out, picked it up. We FaceTimed in the car, and they held up their driver's license to the phone. So, you find ways to conduct these closings in a manner that, is still okay with the customer. And, if somebody's, immune system is compromised, something like that, I understand you don't want to come around me, and I respect that. So we'll find another route that we can accomplish both our goals. I mean, Liberty Title, making sure we're conducting a legal closing, and then also, on the buyer or borrower's end, making sure that, they're presenting proof that they are who they say they are. But I mean, as you mentioned, Jason, putting in place things to cut down on this fraud. I mean, world has some bad people, and mortgage fraud does happen. We just put the pieces in place for our team to make sure that they're doing things correctly.
What do you going forward? What do you see out of all the measures that you've taken over the past few months? Which ones do you see sticking? Which ones do you see going? I hate to say it, but real estate is probably one of the last businesses where you still wet sign stuff, and that original document is the most important thing in the world. With what's going on, do you see any of that stuff going by the wayside, or is there anything that you think is going to stick, maybe to change that long run?
Again, great question. I think, as far as the e-signing and the trend towards all of real estate going in that direction, I think certainly this is sped up by the virus and changes. For example, now, we've signed up with a company called Notarize and another one called Notary Cam, I think is the other one, that we can conduct seller signings that way. Now that the governor said that, the counties will accept e-signatures on recordable documents, we're okay with that. Where we seem to hit the brick wall sometimes is with the lenders still are not necessarily accepting e-closing documents. So I think at the very least, this will certainly speed up, how long, it takes for them to get signed up for this, pay the money, and allow it. I think from what I've heard from my lender partners is that the challenge is they can originate these and maybe even e-sign that, but you still got to sell these things on a secondary market. And is that buyer going to accept an e-signature note? I think you got to filter through that process as well. And once the secondary market starts accepting it, then I think we speed up.
So that's a big holdup right now is the secondary, the mortgage-backed securities market, in these secondary market and whoever beyond them. It's that's where it is, not the individuals like the Wells or the big banks are there still haven't wrapped their head around going for these signatures
found
yet.
any lender that didn't have it, or said that we'll accept e-signatures in their closing documents. There's a lot of lenders that are trending in that direction. So some that we work with have kind of partially e-signed, where they'll send it out to the customer in advance, have them e-sign it, but we're still having wet notes signed at settlement.
Yeah.
So a large portion of the closing package is e-signed, but not all of it.
Yeah, I noticed when we did a refinance with one of the larger companies that do the the securitization on the backside, everything stemmed from the security side of things. That we can't sell this, we can't do this, we can't break this rule because that's what the big Wall Street lawyer says. And it's interesting that you brought that fact up, and to see where that goes, because I guess they kind of hold the ball right now. And I was going to ask Jason, like, if you send something out, if I was buying a deal and Bill was doing our closing, would you care in this current situation if I e-sign something? Granted, we have a relationship, but would you allow one of your borrowers to e-sign?
Yeah, absolutely. And I'll tell you why. Because keep in mind that, when Bill and I have discussed this, and I've talked to this with other title companies, I'm not going to get a title insurance exception on my policy related to this, and neither of these big banks. If there was, it was. Now, keep in mind, when we talk about e-signatures, we're talking about an online notary that's literally, hey, like we're doing right now. Here's the buyer, here's the seller, here's the notary. I can watch you kind of scroll through the e-document and sign it. That's what we're talking about. As a private lender, we don't care. We're holding the paper. The risk, honestly, is on the title insurer side. If they don't give us a title exception, if there was risk on that, then we probably wouldn't do it, and nobody would do it. But from what I guess I was told, and correct me if I'm wrong, as of 2 months ago, all the big title insurers came together and said, yeah, we're comfortable with this. And, I think as a notary, because we looked into figuring out additional ways that we could get in, because we have 2 notaries in our office and we have to notarize things every day. We got to notarize satisfactions, releases. There's a lot of documents that we have to internally notarize. They're not as time sensitive, obviously, as a closing package, but we wanted to figure out ways that we could do it as well without having to, someone come into the office and physically do it. And there's good softwares out there that have it. And yes, so to answer your question, yes, Ian, as long as there's no title exception on the policy and it doesn't look like there will be, it's fine. And, in general, related to this topic, real estate, not investing, just real estate as a whole has some awful, like dinosaur-like processes that are in place, especially with original signatures. I mean, think about any big real estate agent who's been out there for years. Chances are they still have every one of their darn packages that they've had for years. So we have 3,000 closed loan files between our office and our storage bins. It's absolutely awful, right? It's everywhere. I don't know if Ian hopped off or what, but I'm just going to close him out for now until I see him again. Or maybe he went offline. But anyways,
I would say this, Jason. No, I mean, I guess I'd look at the lawsuits that could come from it. Yeah. So all it takes is a few of these people to say, hey, that wasn't me. I didn't do it. And I guess if you're using a reputable, tested, notarized, notary.com, something like that, something that has been proven to work, then maybe that's okay. But if you're using some fly-by-night stuff that maybe hasn't been proven, I mean, again, all it takes is some buyers to come out and say, hey, that wasn't me that did it. And the way it works, everybody gets pulled into the lawsuit. So
but a few things happen. You have a reputable title company, you have a reputable notary throughout that title company. Like if we did one, right? If we did one, let's say I was the lender on the deal, and then you sign you signed it straight up, like all of a sudden it's kind of like, hey, we knew this sign. There's paper trails. And obviously there's gonna, in the future, when there's case search and someone tries to stand up for it and there's legal filings out there that they could use as attorneys can use as hard evidence to show that it was fine, then it's good, right? So they don't have that. They don't have that yet. So I get it. Some of the smaller people will adapt, but in general, real estate's old school and it needs to become new school, and it's becoming new school. There's a new normal of how these transactions are going to get done. Yeah. A lot of people are working remote and will continue to work remote. There's a lot of other deals. There's a lot of other ways to conduct business without your normal walk up to somebody, give them a close handshake, and move on. And unfortunately, that's harder for some than others. Obviously, millennials and younger investors and realtors and stuff like that might have some of the newer aged habits than some of the older school ones. But in general, we're kind of forced to get pushed in that direction.
Yeah, I think sometimes though the tough part is that neither you nor the realtor has the ability to pick the title company. So if the buyer is going to pick some company that maybe isn't reputable, I mean, certainly you have the right to say no, but they get to choose the title company. So that's kind of the question mark is, is the title company that the buyer chooses, are they prepared to do these? Have they tested the software for signings?
But also, like, not that where we're at couldn't get any worse, but like it got pretty bad to begin with, and because of that, welcome back, Ian. Now you're in the other seat, but that's okay. But not that it could get any worse, because obviously it could, but like it got really bad, and we're still, you're still able to conduct settlements. So listen, when real estate really gets bad, and a lot of people don't understand the supply chain of real estate in general, but when it really gets bad is if all of a sudden, a title insurer backs out and they're not offering, for one reason or the other, title insurance on any properties, buyers or lenders, then you're screwed. Then you're screwed. They hold so much of the cards.
Yeah. Yep. Yeah. I mean, we're the get out of jail free card.
Yeah. And so, So and Liberty, so you're owned by Chicago, right?
Yeah, that's right.
So I mean is Chicago the largest?
Yeah, largest title company. Yeah.
And Chicago owns Fidelity?
Fidelity
right?
is the parent company for Chicago, yeah.
Got it. So in general, for anybody listening or watching, however you're consuming this podcast, there's a big benefit to work directly with a title company that is owned by a title insurer.
Yeah.
There's a lot more flexibility they potentially have. So, I feel like everybody doesn't realize the value of title companies and title insurers individually, just because they just don't have the experience with it. And it's like, I'll just go to any title company. And yes, relationship's important, and I understand that. And you need to have somebody with a good relationship. But at the same time, not all title companies are comfortable doing certain things. And, on one side, you might have a title company that doesn't know what the hell they're doing. So they might have some flexibility for you. For a newer title company might not know what they're doing, might have flexibility, but that doesn't necessarily mean that's a good thing. It might be a crap policy that's in place. On the other side, if you go to a newer title company or a smaller title company that doesn't know what they're doing, they might also be strict because they're going to go ask their insurer on every darn transaction if they can do this, or they can do this, can you do this? And that insurer, I promise you, is going to say no in every single one of them, most of the time. And on the other side, you have a huge title company, and on one side, they might not necessarily want to take the risks on stuff, but on the other side, they might want to take the risk because they know it's a small risk and it's something that they're willing to live with. So, yeah.
I think that's exactly right. I mean, title insurance is like any insurance company. It's managing risk, and what's your appetite for what you're going to say yes and no to. How much are you willing to take on? I mean, at Liberty, we are a direct underwriter, so we get to make those decisions in-house. So, it gives us a lot more flexibility when deciding whether to say yes or no to, certain title issues.
Yeah, I was gonna say most people don't realize it, but there's only but a few title insurance companies out there. Not to put your competition out there, but there's not many out there. I don't think people really realize the benefit because it's one of those insurances that you most likely are never going to use. But there are chances, when it comes down to mortgage releases in the past, or some other situations. Maybe Bill, you could give us a couple other reasons if somebody might need to employ title insurance that would come up, and the reason for having that protection in place.
Sure. I mean, I always, Ian, equate it to homeowners insurance claims in the sense that they don't happen very often. You're correct there. But when they do, they are awfully expensive to fix. So that's, what I always tell people when, explaining title insurance to them and leaving it up to them to decide whether they want it or not is, do you want to take the risk? I mean, how often do claims happen? Again, not frequently, but when they do, you're going to have to pay a bunch of lawyers to try to fix it for you. And that's going to far outweigh the cost of paying for title insurance, which is a one-time payment. It's not like your homeowners that you pay every year. You pay this once and you're done. So most of our title claims are over unreleased mortgages, things like that showed up against the seller, that whether they were missed in the land records or missed in our title search, we made it all the way to the finish line and it wasn't cleaned up. And then let's say somebody gets a letter in the mail from a lawyer looking for money, or that person goes to sell down the road and this wasn't taken care of. It wasn't released in the land records. Those are probably our most common claims. And then, the divorce rate still hovers around 50%. And, people come off title all the time. It's on us to prove that was done correctly and make sure that it was.
Interesting one.
Did the spouse coming off title get the money that they were supposed to?
Yeah, I never thought of that one as being a potential title insurance issue. That's an interesting one there. So. Yeah,
I mean, again, you want to make sure, and you can only do so much to protect against these things. I mean, I can't tell that a deed that was done 8 years ago was actually signed by that person, but you want to be protected as much as you can.
Yeah, and a big benefit to having the right title company in general is picking up the phone and just asking them, like, but before you even get involved in a deal, because there's so many transactions that people are so emotionally attached to that they want to buy because they believe the numbers are so good, but then there's so many headaches on it. And I mean, we're at the point in our career because we've got 13 plus years in hard money lender plus a ton more before that. Like, I don't want to deal with headaches, and they're just not worth it. It's just not worth it. And people are dying to try to jump into a deal because they see the potential, but it's just not worth it.
No, I mean, I think this is probably the largest investment, meaning purchasing real estate, that you're going to make, and you want to make sure you're insured properly, and through somebody that if a mistake does happen or a title claim does surface, you have the ability to pay it out and do the right thing.
Yeah, no, exactly. Cool. Any last words, Bill? Any advice? Anything kind of like crazy out there that you're seeing? I don't know. Just thrown out. I'm trying to kill time before the two of you turkeys start talking about Eagles.
That's going to be my party.
Fine. I was planning for that, so fair enough.
I tell you, I see things turning around. I mean, I think I don't want to say we've bottomed out, and we're now on the rebound, but we're certainly in the last couple of weeks getting a lot more purchase contracts coming over. And that's great to see, because that's really what our bread and butter is. And the refis are great, and money's money, but our investment's always in the purchase market, because that's gonna that's the business that keeps on coming. So we've seen a lot more contracts. I mean, you went through a period of time here where realtors were not eager to show houses because does the person whose house you're showing, is somebody sick there? Is the person you're showing houses with, are they sick or infected? So I mean, there was just a lot more risk, and there still is, but being able to do things virtually or make sure that a house has been cleaned and sanitized before showing it. I mean, I think somehow these things are coming back around again, because we're seeing a lot more deals come over. I think for investor purchases, we didn't see a slowdown in that at all. And I think people are buying houses because of the numbers. They don't need to see the house. You don't need to see the condition of it. You know where it is, and the numbers speak for themselves. So, they tend to be looking at it more from that investment standpoint with the numbers. So that, that business has continued. But as far as first-time home buyers and stuff like that, I mean, it's warming back up again. So that's good to see. Yeah. How about you guys? Keep busy?
Yeah, shaking. I mean, we can't complain. It's everything. We didn't really see any change. Maybe a little bit slow down in service calls, but life's been status quo. I mean, you can't really complain.
Yeah. I mean, we've been the same. I mean, as you probably know, a lot of the institutional backed hard money lenders paused or went out of business. So we got an influx of business through that. And again, just because you get an influx of business doesn't necessarily mean it's closed business or good business. A lot of these investors were still looking for similar terms and similar qualifications as they were getting from the institutional backed lenders. So, it's all good. But I will tell you that in general, the deals that I think everybody are seeing out there are better. And they're not going to jump out at you, unfortunately. They never will. If you had a business model of, hey, the business is just going to come to me and jump on my lap, I'm not saying that it's not good business, but it's never going to be the best of the best business. You got to be the one that's proactively out there hunting for it the best way. And again, that doesn't have to mean forever. You do a lot of the heavy lifting, and then eventually you get, a few bushes blossom, or a few trees, start growing, and you have, a lot of sources. And, unfortunately that takes time, but I believe we're all in a really, really, really good opportunity right now. The ones that have experience and the ones that have resources and the ones that have liquidity obviously have a huge head start, but the ones that don't is just as strong. There's still a lot of very good opportunities right now to hop in if you haven't been investing in real estate, or if you haven't been involved in real estate.
Well, actually, let me ask you guys something, because I had a client recently who reached out saying, is now a good time to list my house? And at first I thought, no, it's an absolute terrible time to list. But why would you do that? People know you're desperate. If you're putting your house and listing it now, they know that. And then I thought on the flip side, well, you know what? You may not be getting top dollar on your list now, but you're going to make up for it on the buy side. So it does kind of wash a little bit. But what are your thoughts on that?
I think there's always a good time to buy and always a good time to sell in any market, no matter what. If it's going up, if it's going down, it's going stable, because it depends on the situation. Number one, there hasn't been an influx of listings right now. So inventory is not up by any means. So inventory is down, actually. Yeah. So, and I believe that we're going to get a little mini boom this summer as soon as, locally, things open up more than they have. So I think that'll happen. But I'm guessing there's not that many listings in your neighborhood, in any of our neighborhoods, that just popped up, or not an influx of them right now. So I think when those happen, there's going to be a lot of demand. People are going to be wanting to move again. The spring market's going to is going to be in the summer, going into early fall with school. So I think now is a good time to do it. And the good thing is we sold that property yesterday that Liberty Title, Bill Daly was involved in. Thank you. They did the closing on it, and that went under contract that went on the market the week before coronavirus. The week after coronavirus was in full tilt, it went under contract for above market, or asking to above market with some subsidy. And we were surprised. The guy was like, interest rates are low. It's the house that I want. It makes sense. And we did it. And, we had to change, the inspections were done, without anybody, like one person went in and the next person come in. But again, the transaction still got done. I think now is a great time if you're a buyer or a seller or a landlord or a tenant a resident that wants to move into a property. I believe there's always a good time. I mean, because the thing is this, even if the markets, let's say you're selling your primary residence to buy a new primary residence, and let's say you're going down, right? Like everything's moving down. And I'm not stating that's happening now. I think that will in the future, but I don't think that's happening. I haven't seen that, at least locally. Let's say today the house is worth $100,000. And it's like, oh, it's worth 90 now. I need to sell immediately. I need to get out, type of thing. Well, guess what? If you're buying a new house, you're selling this at 90, and let's say you buy an equivalent house, well, then that one's at 90. So it's the same thing. It's not like all of a sudden you're going to be taking a complete loss, and then on this side it's going to go completely up, and then you got to buy all the way up here. It's all equal. Yeah, it's all equal. So I think that's important to kind of look at. And we've talked about this on other shows, but in general, there's not a ton of pain in the market right now, meaning there's no just giveaways on houses. So unfortunately, investors aren't going to be able to just go and get an absolute. I'm sure they're out there, but they're not a ton of them. There's issues when there's foreclosure signs, on 2 of every 3 houses in a neighborhood.
100%, and I definitely think there will be a time and a place. But look, if you're in a position that you can sell, I think you can take advantage of some things right now. If you have a way to bridge yourself to a possible dip in the market, But again, you got to look at it. For us as real estate investors, it's a little bit different. That our personal house is not necessarily as much as our biggest purchase or real estate investment. So it's a little more. Our answer is a little bit different than most homeowners. Sure, if you're a homeowner, now might be a great time you can get top dollar, but the adverse effect of that is there's not high inventory on the other side. Banks do have the positions to hold back and potentially don't need to sell houses right now, even though they're in foreclosure or REO status. So there could be an issue for you jumping into your next house that you could have issues in as a homeowner. So you got to weigh out your options, do what's right for you, do what's right for your family. I think someone always said it best, the best day to list your house was yesterday. The next best day is today. So, if you take that motto and you can apply it to yourself, then, why not use it? If it's right for you and where you want to go and you have a place to move on to, then by all means, go ahead and do it. So I see old Harry's over here giving me crap because I'm supposed to be in work. I told him I'd be in around 3:30. What are we going to do? I'm running a little bit behind. So I don't have to technically be in work till 5. So that's the good news. But Bill, what's the best way to get a hold of you? And, if somebody wants to employ a Chicago title, or Liberty title, what's the best way to get a hold of you guys?
Yeah, sure. So Liberty Title, we have offices in Lutherville, Baltimore, Millersville, Eastern Shore, Edgewater, and Annapolis. So, geographically, we're pretty spread out, and we do closings in, all 50 states because of the Chicago ownership. And then, locally, my cell number is 410-868-6229. That's probably the best way to get me because I'm on the road a lot. But, just love helping people out, whether it's a transaction or just being able to share, my knowledge with people about, real estate and certainly title questions. And we have a great team of people, a great team. So if it's not me, one of our Liberty Title members are happy to help out.
Appreciate it. Yeah, before you hop off, comment what the Liberty website and stuff in the comment section, and that'll get spread because a lot of viewers and listeners don't get to hop on here live, but they watch it. They watch or listen after the fact. So throw that in there.
Yeah.
Cool, Bill. Well,
the website is www.libtitle.com. We spent a ton of money rehabbing it and all that, so it really has everything you need.
I'll comment that real quick. There we go. Cool.
Yeah. And Jay, real quick, thank you to you. You guys have been great. You're really the only hard money company that we've ever used and recommend. So I appreciate all your help with that. Always great doing closings with you. And Ian, good catching up. And I look forward to socially distancing with you at the Eagles Super Bowl.
Fly, Eagles, fly. Let's go. I'm ready. I'm ready for another one. So, 100%.
Gentlemen, it's always great catching up with you. Happy to come back whenever you need me.
Thanks, Bill.
Boys, good talk.
Yep. See ya. I think Jay's frozen. Jay, you frozen? Jay? There you are.
There we go.
There you go.
Wait, how did Bill get rid of himself?
I don't know. You were like frozen. You were staring at us. No, that's good, though.
I know.
It's good to hear that, title's still moving. They're still seeing deals come across the table. Like you said, I don't think people realize as a real estate investor how important it is that, if a title company is not seeing transactions come through, there's a potential that there's a bottleneck and, you're buying a house on the front side and there's nowhere for it to go on the back side, whether it's a refinance or a homeowner sale or whatever you plan on doing with your real estate when you're done with it.
Exactly. Yeah. And title insurance is so important to get. Being involved in 3,000 transactions, we've had to utilize owner's title insurance, lender's title insurance, property insurance. You utilize it. It's just a numbers game. You're going to need to do it. And, it's, the good part is having those things in place. So it works. And, you want to make sure you use one of the bigger title insurance companies, like a Chicago is obviously a good example through Liberty Title, because you want to make sure, the paper's worth, what's written on it, obviously. All right. You want to do PPP real quick?
I just
what we talked about.
Yep, I just pulled it up.
Hop in on that, and then I'm going to jump in with something after you're done. How to turn.
Yeah, so the PPP, there's been a lot of talk around it. Our banks, like I said, People's Bank's been very proactive with it. I've tried getting them on here. I respect Kent, Ken Ketterman and his team. He did ask around. I guess everybody's scared of the camera. But hey, Kent, I do respect it and appreciate what you guys have done for us. So for it to be forgivable, as discussed, it needs to be at least 75% of your loan proceeds need to be used towards salary for it to be forgivable. So that includes salary, wages, commissions, or tips capped at $100,000. And it includes several other benefits that you might provide to your employee. What does it mean by covered lease obligation? Your offices is covered for that other 25%. Covered utility payments is another 25%. The amount of forgiveness of a PPP loan depends on the borrower's payroll cost over an 8-week period. When does that 8-week period begin? The 8-week period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. So the day you get your phone from those 8 weeks on, you're on the hook. That's your clock for running for payroll. There's some more information about payroll costs, exclusions, covered mortgage obligations is similar, again, where your office is located. And there was a few other things in here. I'd be happy to share this document if anybody thinks it would be helpful. Just shoot an email to me, ian@equitywarehouse.com, or maybe Jay, you can get it up on the Real Estate Reserve podcast website as a downloadable document. I'm sure Peoples would be happy to share this with everybody. They've been doing huge things. I know our title guy, lawyer, they were able to get him approved overnight with a non-banking relationship. So
what have you, I mean, the most important topic, have you heard anything related to people that have the PPP? Have you heard anything more about if K1s can get some of that money?
No, you know,
if you're paid out as a K1.
I heard that in one
distribution.
Spot. Yeah, I heard it from one person. Every documentation I've seen so far, I've not seen it mentioned. And I wish I remembered. I could have sworn I've seen it on the news one night when I was at work. That was a topic of discussion. I don't know if it was hypothetical or if it was real. If it is real, my God, that would help all of us, you know, because last year our payroll expense was a little bit bigger than it is this year. So
it seems like a lot of people aren't going to be able to utilize this because you got 10 weeks worth of funds, but you only can use it in 8 weeks.
Well, but that was the thing. It's supposed to be used over an 8-week period of time. And the other 2 weeks are being used as your operating expenses, essentially.
Yeah, but that's assuming, you know, for companies that have higher operating expenses can utilize it. The ones that have low rent or low mortgage or low utilities or low whatever aren't going to be able to utilize it. And then it's got to be paid back. Or what's the interest rate on it to get paid back?
1% over 18 months. So, I mean, it's not. Yeah. Look, it's not the end of the world. I think most of us are in a position just to pay the money back and just be done with it. You know, utilize what you can. And yeah, if your payment's small, why not? But in the grand scheme of things, you know, if you're left with a small amount, why carry that debt over your head? Just pay it off and keep it moving, you know? So yeah, that's where that's at. You know, the PPP, it's been interesting. Again, it'd be May 1st just passed. I know we haven't discussed that. Our rents were pretty much on time. We just took over a 76-unit apartment building. Everything seems to be status quo there. No one's really, you know, reaching out saying that there's some emergent need. So again, I haven't really seen anybody affected too negatively by it. With the portfolio that we're running. So I guess we're lucky in that sense.
Yeah, same with us. And who knows what direction that goes in, you know, 1 or 2 months is typically manageable. Multiple months, maybe not, but it doesn't seem like it is going to be multiple months after this. You know, the big test is going to be what happens when the local economy opens up and people go back to work. And if they're concerned about going places and if their businesses are up and running and if their businesses are even going to stay in businesses. You know, I believe that in general, a lot of the small businesses that tried to rely on this Paycheck Protection Program, and unfortunately, so many of them didn't get it because it was kind of a funky situation. But in general, hoping that would help weather the storm, and I'm hoping that everyone who has been unable to work, when they can go back to work, it'll pick up where it's left off, and time will tell. And I'm not sure how easy that is in general. So I want to hop into one other thing real quick, just because I got some really good feedback from it today. It was an email. Well, first off, I haven't worn this HMB shirt on the show, and I wanted to share this one because this is my favorite one. I designed it myself. I'm the only one that likes it. I think RJ Breeden likes this one too, but not many people liked it. Not many people liked it. And I forgot it was in my drawer, and I was like, I'm going to wear this onto the show today.
I mean, the only thing you should have done different maybe is make
this white.
White, exactly.
White. Yeah. No, I agree. So typically what we did is we have these full-time outsourced designers that do a lot of stuff for us, and I usually do T-shirt designs. You know, that's where the Maryland flag one came. I don't have any other ones in here. That's where all the T-shirt designs come from. And usually if you leave it up to me, I'm going to say, create, you know, like surfer, skateboard, alternative style ones. You know, years ago we had like these ones with like money coming from everywhere, and Chris was the only one that wore that one. It was nuts. It was like this bling bling shirt. I mean, it wasn't bad, but okay. So we sent out an email today. If you're on our email list, if you're not, just go to hardmoneybankers.com and fill out a form. You'll be on our email list. But we talked about how to turn this lockdown into an opportunity. And there was 3 things that we're doing internally that I'm happy to share, and hopefully you can utilize some of these things internally. And the only reason I'm bringing this up is because, our no reply email that I check, because people like to respond to no reply emails, and they can because I get them. I had a lot of feedback on it, and a lot of good feedback from different people in different sides of the industry. So this is what it said. I'm just going to read it real quick. It's not that long. We've been thinking a lot over the last 6 to 7 weeks of this near lockdown, of how this can turn the whole situation into an opportunity to improve our personal business. It's been an interesting process. First, the immediate need was just to adapt our entire team to functioning remotely, with only one person per day allowed to go into the office, everyone else working remotely. Next, we added some super relevant content marketing to put out to our real estate community to help everybody cope with the current situation. Things like we're doing now, blog posts, things like that, just to help other real estate investors and real estate agents inside the market. And I'd encourage you, if you're listening or watching, whatever your niche is inside real estate, let's say you're an appraiser, put out content of how you can help your clients. Or if you're a real estate agent, put out content to help your clients. If you're a real estate investor or anybody in the field, figure out a way to provide content. So that was our next thing. And then we took a hard look at our systems, processes, and underwriting to see what we can improve so that we could hopefully thrive during uncertain market conditions and changing landscape. This has been a very worthwhile project to us, and we've come up with better ways to accomplish all these things because of it. What are some ways that you've implemented improvements inside your business? So that was a question that we asked, and that's why I got a ton of feedback from so many people. And I'll tell you firsthand that we've had a lot of stuff that we've had to deal with in the past that we have to deal with now, like communicating back office when someone can't just walk into your office and ask you a question, or communicating. How do you communicate it? Does it make sense to call, text, chat, FaceTime, something like that? Like, what's the protocol to do that? So there's a lot of things inside people's businesses that, not that they're bad things. One of the things that we've realized is there was a lack of communication on parts of our process that we didn't realize there was a lack of communication. And until we realized that these questions were coming up regularly with oversight, we didn't realize it was an issue. So I think there's a lot of benefits from where we're at. And obviously I'm a very optimistic person to begin with. So I'm not just saying that, but I believe that there's benefits. There's benefits of, one extreme to the next. How are we going to adapt? And I believe that most companies are probably in similar situations. A lot of them are like, this sucks. This is a headache. I don't want to deal with this. And not that I disagree, but at the same time, it's, hey, well, guess what? First off, we have to deal with it, number one. And then number two, if we're going to deal with it, let's figure out and let's reset and figure out the best way to do it. So moving forward, it's going to be more seamless and more efficient. And to be quite honest, better.
Yeah, no, it's a great, I think we've said it over and over and over again. It's almost like a stress test. And it's not so much that you have more work or you have less work. It's, you're really stressing parts of your business that you couldn't do. And you could never run this scenario inside of your business and be like, where are my weak points? Like, it happened and everybody's adapting on the fly. And, you've said it several times, the stronger are going to survive and the weaker gone. And those in the middle, we don't know what's going to happen to. But it's interesting to see. And it's not just small businesses that adapt to this. A lot of the times it's the small businesses that you see navigating, and, they're like the jet skis and the big, Coca-Colas of the world. They're the Titanics. You're literally watching the Coca-Colas and whoever, the large corporations of the world having to make these same adaptations that we do. And it's almost putting them back onto a level playing field with us as small-time business, as small business owners, comparatively speaking to what they do. I know you brought it up before. Gary Vaynerchuk told all the big corporation leaders, go out and learn Facebook ads, go out and learn Google ads. That's how you're going to monetize your business during this time. And those are things that we both do every day. So it is nice to see, being put back on a level playing field. And it is nice. It is fun to go out and work through problems. It was very easy for anybody right now to just say, you know what, screw it. I'm throwing my hands up. I'm done. But now you can actually sit back and say, let me fix this. Let me fix that. Let me fix this. And boom, on the other side of this, you'll be rocking and rolling before you even realize.
Yeah, exactly. And there's going to be so many people that do throw their hands up, and then that leads to opportunities. Somebody else. I mean, I've been, we talk and we try. Go ahead.
I was going to say that that's a real interesting, there are people that are going to throw their hands up. And I think as real estate investors, well, some people don't consider us a business. I do think there's going to be opportunity coming forward that people are going to be able to go out and buy businesses for pennies on the dollar. I think it's a skill. If you're a wholesaler, if you're a deal junkie, if you're in that type of business that you understand other businesses, I think there's a huge opportunity coming out on the other side of this. Being able to value businesses and being able to go through that was a pandemic in itself of businesses and not having a place to pass them on, and that's going to be something very fun to watch here in the very near future.
Yeah, I agree. And I've been listening to, shout out to Jay Scott. I've been listening to his Bigger Pockets podcast a bunch recently. And, most of them, in general, I go back and forth with content that I consume and podcasts that I listen to and things like that. Just depends on where I am inside our business and where I am, just what's going on with stuff. But a lot of them recently have, it's got my attention. So I've been, and they're longer podcasts than I typically like to consume, because they're 45 minutes to an hour. Similar to this show actually, but I've been doing it. And one of the guests that he has was a guy related to, like, this is the absolute best time. Dude, why is my computer freezing up or something? It's killing me.
Jason's frozen. I'm here. I don't know if we can hear him, but Jay Scott did have somebody on who discussed about buying businesses and how
which is interesting.
There you go. You back? Hello?
Dude, I don't know what's happening.
Dude.
I don't know why this software is working great and now all of a sudden I'm lagging.
Son's on Fortnite again.
Could be. All right.
Let's wrap it up anyway. I got to get to work. I got to go to the fire department tonight. Hopefully it's a nice quiet night.
You do? I thought you were off for the whole month.
No, off day works for the whole month. So I have to be in by 5:00. And the guy that I am relieving has been working for 34 hours straight. So I probably should get in there and get him relieved. But with that being said, what do we got lined up between now and Friday? Or are we just going Friday only?
Maybe Friday. Dino got me hooked on this new app called House Party. Comment below if you use House Party. I've been using it. It's actually pretty cool. That was the only way you knew how to communicate with me, because I was like, yeah, well, I'll send you a link. Dino, I know you're not on Facebook. He's like, oh, do I need a Facebook account? I was like, no, I'll send you a link. You can hop on. We use a software called StreamYard. He's like, is it like House Party? I was like, I don't know what House Party is, Dino. And he's like, oh, let me send you the link. So next thing you know, I'm freaking FaceTiming Dino walking around. So he's a mortgage guy, been around for a long time. He's going to contribute a lot. So I don't know if we're going to get him on Thursday, but we got Matt, is that his name? Matt Fullerton on Friday.
Matt Fullerton Friday. We're going to do a big case study on how they were able to scale and do $1 million in wholesale, just shy of $1 million in wholesale fees in 1 year, and what their niche market is. He's also going to go through a case study of a hoarder house that they just recently did, and how they were able to navigate that process and get that property sold for a nice profit for wholesale. So with that being said, let's keep it up, rock and roll, and maybe we'll jump on Thursday between now and then. If not, we'll see you Friday at 12:30, and we'll catch up with you then.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time.